morning. Welcome to the Brew. I'm your host, Lex, and we are back live. We've had a couple of little reruns of the past because of the travel schedule. Sorry for that. But Molly and Paulina took it over on Friday, did a great job. Good to be back. Today, we're going to talk a little bit about the market, probably bring up a little FOMC, although we're going to hit that harder tomorrow. And we're going to talk about diagonals a little bit, diagonal option spreads. So stay tuned for the opening bell. Good morning, Molly.
So how was your?
Go ahead.
So you're in a ski jacket. So are you on location?
No, I'm in the studio. You can tell. It is a little chill. We haven't moved over from air condition to heating yet.
All right.
So when my neck of the woods, you have to do that. So right around the early fall, that's when you go air condition, heating, air condition, heating. You got to keep moving it back and forth. So we're still in air condition mode, and it's about 65 degrees in my house. So I'm a little chilly.
All right, I love it.
Yeah.
So,
how about you?
I am sitting here in beautiful California, and we don't get snow, so we don't own parkas. And I think it's in like a snow bag, so we get the like ski bag out, and then they live in there permanently.
I got it. Good.
All right. So we have
go
some
ahead.
cool things going on. We've got Fed rates coming out. We're going to keep an eye on, and then we have Instacart came out with their fourth biggest IPO, which is exciting. So we'll keep eyes on that. And but I'd like a little education this morning. So what do you have on tap? I would. I'm feeling the Wednesday vibes.
Okay. Well, here's what we're going to do. We're going to talk a little bit about. We're going to take a look at the markets in a second. And then we're going to talk a little bit about diagonal spreads. Now, brilliant. We will ultimately get through all these spreads again. Okay. And the idea here is we're introducing a few things. Some of these things that I talk about are some of the more common types of trades I personally like to do. Okay. And especially, when we were on the floor, some of the concepts that we talk about here are things that we sort of gravitated to in terms of strategies and that sort of thing. Okay. So I like to tee those up early. And then when we go back through our whole series of beginner, intermediate, advanced, we're going to hit these things again in more depth on each of the shows. Does that sound like a plan?
Yeah. And I had a question for you. So when you're doing research and you're trying to figure out which stock to go into, what are your steps that you take as a professional, as a market maker? How do you, what kind of tools do you use to gain an edge? Yeah.
Right. Good question. An edge is important. We're going to start drinking coffee every time we say edge too.
Let's start now. I'm going to start now.
I didn't bring my coffee today. It's a vital concept to the edge because I talk about edge in retail trading a lot because you get into trades from the negative side of edge, right? And I always refer to the bid-ask spread as the market maker's haven for edge, right? They buy the bid, they sell the offer. Retail folks, we do a little bit of the opposite. Hopefully you get somewhere mid-market. In which case you probably have neutral edge, right? So super important. Now, to answer your question, in the retail world, different from the professional world or the market making world, retail world, you tend to need to find stocks that have decent abilities to move. Okay, and I'll say why in a second. That have, I would say, large open interest and volume figures. So they are the bigger tiered stocks that are active in the option space. The last thing you want to do, okay, as a retail trader is get yourself into a position that you cannot get out of or that you'll have very great difficulty getting out of, right? And we've all probably seen it. You get into a stock and you're like, oh, I love this stock. I got a great spread. And then when it comes time to get out, there's no liquidity. Markets are super wide, right? And then you give up your entire profit trying to get out of the thing. Does all that make any sense at all?
Yeah, I jumped into soda once and I was in it for so long. I have to go to a store to see what this thing is. And so back in my beginning, I just didn't even know what it was. It just looked good. So I walked in and I said, my next question for you is, when you are in a bind, not everything is rosy. So when you confront a challenge, how do you work through that? So mentally, what are some strategies that we'll go over in the future? What are some strategies that you go to that are in your back pocket? But
Yeah.
when I went, one thing that helps mentally is that you can go to a store, and if you pick up soda and try it out, and you can say, I'm actually an owner in this company, and that gives it more of a long term, it's okay,
Right.
um, value trade.
Yeah. No, that's good.
What do you do?
So you're doing like what is it, the Lynch school of investing? You go to a place, you figure it out physically whether you like it, and then you invest. I kind of like that.
Yeah,
And I do that a little bit. I back when Starbucks was a thing, or was a new thing, I should say. It's a thing still. I was like, I went to one. I'm like, who the heck is going to buy this expensive coffee, right? And truly, it was
yeah,
a little bit pricier than your average cup of 7-Eleven Dunkin' Donuts kind of coffee. And then,
yeah. It's more
kind of,
more expensive than a gallon of oil of
yeah,
gas.
right. So then I went back a couple times, and I'm like, this is kind of cool. And they made you feel good in the little stores, right? I was like,
Yeah,
look at me, I'm so cool. I have a backpack and my laptop. I'm gonna do some work in here and pretend like I'm a total sketcher. This is
yeah,
awesome. So I did
right.
that. I'm like, oh, I kind of like the experience. I went up and got another cup of coffee. Yada yada. The experience. We're living it now. But what I came to conclude with Starbucks as an investment, and I wouldn't say I got in Starbucks early, but we did some trades, way back when on the early days of Starbucks, and we're very successful. It Coffee in the Starbucks world is an affordable luxury, and I always use that term.
Quiet. Right.
So it's
True.
something that is overpriced. Okay, it's overpriced, but it's great quality. It's a great product. It makes you feel good. It's cool and catchy, and it's $3 for a cup of coffee. Now, a cup of coffee is probably worth $1, right? But you pay three for it. So you pay $2 of negative edge. However, the affordable luxury part is you're like, it's only $3. So I can afford $3, even though I'm paying up massively for this cup of coffee. And to me, that's kind of where they succeeded. I think they provided a whole morning sort of, experience that was an affordable luxury, right? So I that's why I loved it. I'm like, what a company. I'm in.
They also incentivize value traders. So when you walked in, if you buy our stock, we'll give you discounts, which I never knew. So you get 30% off all Starbucks if you own Starbucks. And this is not a pitch. I think every stock has some of these great deals. But the other thing about walking onto the floor of any company is, we walked onto Best Buy, and these guys on the floor knew what inflation was doing to the products, and which products were moving and which
Mhm.
products weren't. When you walk into that store, there's, as far as the eye can see, publicly traded companies. And
Right.
before their earnings come out, before um, a lot of street talk comes out, you can actually go to the source, and these guys selling these products on the floor can give you a massive edge. So
Mhm.
whenever you're shopping with the husbands and the wives, and or you're out with the kids, start to just ask questions if you're idling by, because you can get a lot of really insider information there, which is
Yep.
neat.
For sure. No. And excuse me, this leads to a bigger concept when you're a retail trader. So someone like our good friend Marcus, who does the wheel strategy, and he talks about that, I think, on Mondays, once a week or once a month on the Brew. I'm sorry, on the Hub. Um, he's a big proponent of really studying your underlying stock and really getting to know the fundamental valuations of the product so that you can make a good informed decision. Great advice, right? Now, in the market making world, as I told you, and I say this a lot on the show and elsewhere, if you said to me, what does double click do? And it's one of our 350 stocks that we make markets in back in the day. I'd say, I have no idea. I can't even spell double click. I don't know. I don't care. And I don't want to know what the fundamentals are. I don't care about capitalization. I don't care who the president is or the chairman. You know, I don't care what the peg ratio is. None of that matters to me. Why? My edge is different, right? As a market maker. In today's world, in the retail world that I find myself, I've had to learn a new skill of placing an ability to give a directional valuation to my trades. Now that can be technical, with charting, which, you know, some people really, really use charting, and I'm not going to badmouth charting. I know it works for a lot of folks. I am not very good at it. So, you know, I tend to look at charting as a little bit of a lagging indicator. When someone gives me a leading indicator, I'm all in. I need that one. And I know someone's going to say, oh, here's the leading indicator, Lex, you got to try it, which I will try, I promise. But it tends to be stuff that's happened in the past. And like, how am I going to post something to the future with a past sort of indicator? Anyway, so then you get to the point of understanding your company. And if you understand directionally the value of your company, you can put on option trades galore to take advantage of that direction, right? So it's I guess my prognosis here, or my recommendation is, as a retail person, you kind of have to do a little homework, right? You got to get yourself off the couch. There's so many places to go to do homework, right? And then, you know, the other thing I'd say is, if you don't understand what a lot of these fundamental numbers are, there's Bard, there's ChatGPT, there's Google, there's Bing, there's Yahoo. Start searching, start reading on what these things mean, right? So you really, I think you have to have some value of directionally what's going on. Now, here's the other thing I'll say real quick. I know you want to ask me a question. I can tell. I'm going to say this too, that you can certainly create spreads with options, and that's why I love options so much. So that you don't take advantage of a certain direction, you take advantage of just general direction. It could go up, could go down, and what that tends to mean is you're selling some kind of premium. You're hoping for some sort of neutrality in the underlying or the market in general, and you're taking advantage of theta harvesting.
I got to do it for both of us.
I know. So I always talk about that. I love being short options. Okay. But I never try to be net short options. So if I sell 2 of an option, I have to be long 2 of some other option.
Okay. Right? As a balance. Yeah.
Right. If I sell 3, I have to have at least long 3. Okay. I can certainly sell 3 and be long 4 or long 5. That's okay, because I'm net long in that situation. So I will always speak around that. And I'm going to tell you a story next time, or maybe 2 times, about my biggest loss on the trading floor. That turned out to be a very happy comeback, but I'll break it all down what happened. And it was a mistake, or it was just being sort of, hey, what could go wrong? I'm a big trader. Wow, I'm short all these units. I'm collecting premium every day, and the weekends are great because it just rots away. And then one day some news came out in that stock, and woo-hoo-hoo, that one hurt.
So that's what I want to know. So yeah, right. So I want to know how mentally, because when you talk to any professional athlete, which you are, Lex, is a trader, you're a professional trader, and you have physical reactions. So how do you, any professional athlete will tell you that it's 10% perspiration and 90% inspiration. So it's really like a mental game when you're competitive. And so how do you manage that mental piece?
Yeah, it's not easy. And that's a good analogy with the athlete. The athlete faces adversity a lot in any kind of competitive sport, right? So that they just don't always win, unless maybe you're Tiger or someone like that. But you always face that, right? And I found that on the trading floor is very much like you when you have a loss, you can't quit. Obviously, there's no quitting. There's no 12th place ribbon either, which doesn't mean anything to me. You have to come in and you pull your shoes on, you get down there and you fight. That's what you do, and that's what we did in this instance. I'll get into specifics in another show. It'll take a little bit, but it's an interesting tale of how you keep moving in the trading business, especially options. And you can always kind of manipulate and maneuver into new situations and move things around and rejugger and manage risk. And, for us, it was constantly massaging a lump of clay. Right. And the other day, my wife said, "You're like a lump of clay." I go, "Really? I'm getting lumpy?" I said, "God dang it."
Not with your Friday Pilates, impossible.
Oh yeah. Friday Pilates is coming up. So it literally is molding a lump of clay on a regular basis. Now, that was more the market making side. I would say that a retail person might tell me it's not like that as much. You have to be patient on the retail side. There's a good argument for that, right? The only thing I'd say about the retail side that's different is that you have to have a risk parameter that when that light goes off on the negative side, you are disciplined to get out. And when that light goes off on the positive profit side, you're disciplined to get out. And the
Right.
biggest problem that retail folks have, and probably beginners, is the common phrase, they let losses run and they take profits too soon, right?
Got it.
And we're going to get someone on the show who's going to tell us a little bit about how they manage that in the future. Because there are certain, people have rules of thumb and certain metrics. I have my own. But you need to have that sort of trade plan mindset, I think, as a retail person.
And I think what you just mentioned, so Matt Cashman being the tip of the sword, I really do agree with having tools under your belt. So when you take losses too soon and stay too long, and take returns too soon and stay too long in losses, it seems emotional. So when you have parameters like you're talking about, you have the education and the tools, you can start to remove the emotion and look at it in a more binary fashion. And I think as far as the mental part of trading, whether you're in a sport, whether you're trading, whether it's in life, I think what you said was the most important, which is to keep moving. And so to not freeze. And that can be said anywhere. So if you've got tidal waves coming over you, and there's always a way out, and you make sure that you hit the books, find a new tool, research, and I think that's why these weeklies are so nice, because it really starts to spread things out. You don't heavyweight into and to get stuck for a month, and you can keep things moving in that sense too.
Yeah, I think the weekly, the 0 DTs or everyday expirations, whatever you want to call them. I think listing those is probably help the retail person in terms of the strategy, right? And you made a great point. No retail person is really trading 2-year expirations, big massive leads. And they just don't have the ability to move that inventory around like a market making community can, right? So they tend to stay in front dated stuff, which is fine. There's nothing wrong with that. And I actually encourage it. So, instant gratification, use time to your advantage, and stay in. My feeling is someone can make an argument with me about 90 days and in. I prefer 60 and in. 60 is the honey zone, or at least the start. 30 is the real honey zone. That's when things start to get interesting at 30. And then as they decay down from 30 to 29 to 28, then the theta curve starts to accelerate a little bit. So you can do some cool things there.
Then you have these bot trades where if it increases frequency of trades so much that there's actually regulation, and we'll let Kirk from Options Alpha talk about this, but he had made a really impressive point where when you start to get into that, there's a rule that kicks in that turns you into professional trader, which then gives you a whole different tax parameter. And so that's the thing with Matt Cashman, which is really understanding your surrounding, in your environment, and really learn. And this thing fits in your pocket, and you can be trading all day long and studying all day long, but it's again goes to that balance. So not only balance in your trades, but balance in your life. So you can really get really addicted to trading. So how do you handle that too? How do you not stare, and how do you go? Because you have such a nice balance with your family. It's really important to talk about. How do you spread your wings and stay focused at the same time?
Yeah. So again, two different worlds, right? Market making world versus, and I unfortunately I can't get rid of the marketing world because I did it for so long.
Right.
So I know I'm a broken record relative to that, but that business is all about being there and being there all the time. Okay. The market making business. The retail business is about deducing your strategy, finding what the trade is that you're going to make, making it, having a set of parameters to get out, either bad or good, and then staying away. Yeah. So you have to have some ability to not overcomplicate the situation and overtrade the situation. That is an absolute, it's so enticing to sit there and just keep pounding away on the machine. When we did it off floor after we were market makers, I swear I was like a freaking heroin junkie on a machine. I was like, holy cow, I could just hit anything. I just kept trading and trading. Before you knew it, I traded 1 million contracts in a day, and all those commissions. And I'm like, geez, that did me no good. So
Right. So,
it's hard to go from market making to retail, because
okay.
in retail you want to do very much less of what a market maker is, right? You want to
Right.
not touch it as much as possible, right?
Right.
Let it work for you is another way of saying it. So yeah, it's insane. It's insane. Okay, so let's do this. I know I'm looking at the time. We only have a few minutes left. Let's take a
Okay.
quick look at the markets if we can. So what do you think, up or down? Oh,
I'm
what
gonna
are you gonna
go down with the Fed.
say? Okay, it's the Dow's up a little bit. You can see that on the screen. Thanks to CNBC for this this info. Nasdaq's down a little bit. S&P's, excuse me, up a little bit. Typical, right? We have FOMC coming out. I think the analysis I've read, and I know Jimmy and Bobby on Wednesdays talk a lot about this stuff, and they're they're the true experts. But it looks like there's almost a 0% chance, a 1% chance that they'll raise rates on this next one. That's what I've read. I didn't delve into it, but hopefully maybe Jimmy and Bobby talk about that.
I think
I think
they're
today.
also,
They're later today, right?
yeah, and I think they're anticipating slowing down bond purchases. So they'll, there's been a lot of money being pushed into circulation, new money. So 80% has been pushed into circulation of our total currency in the last couple of years. So that buying power, why do we care as people, is that when you go buy your Starbucks or you buy your whatever, it's your dollar doesn't go as far. And
Right.
then when bonds start to the purchasing of bonds, it's a constriction. So a lot of retirees invest in bonds because it's safe and conservative, but they've invested in low interest rates, and so low interest rate bonds. So those start to lose its value, and so you feel this huge pressure coming from a lot of angles for people,
Mhm.
and that's why I just think retail trading for someone who is retired, and it's or someone who is maybe lost their job in COVID, or what we saw that happen during the shutdown, and any future shutdowns that we anticipate those coming. This is such a great
Mhm.
plan B.
Yep.
And I think I've never, and I'll just say this before we move on, when someone jumps into options trading, there's like this, when you get that first wave, I'll say, you get that first success, you develop an addiction. And so make sure you maintain your balance when you first get, because it is fun. It is exciting to have this other avenue of income, and
Right.
to really invest in companies that you love and have an impact. It's
Yep.
really, get introduced to such a neat community. So when you start going on Reddit and finding your people, it's really neat. It's a
Yep.
neat ride.
It is.
Yeah.
It's very good. Become educated. That's the idea. That's how we do these.
Yes. Be
I think we
educated.
got about maybe 5 minutes. How do you like the new time, by the way? 9 o'clock Central.
My soul is loving it, Lex. My soul
Yeah,
is
because
loving the new
you're on
time.
the P coast. We call it the P coast because that was the Pacific Stock Exchange, right?
Yeah.
So you're out there 2 hours earlier, man. This is way better.
Yeah, I'm gonna retire the snow leopard. So the California, yeah, I'm starting to see people when we actually do this. So it's nice. It's a nice
That's
thing.
awesome. Yeah, I like this time
Yeah.
too. Plus, the market's open already, so we have some events going on. That's good.
Yeah.
So what I was going to talk about today, even though we have a minute left, is the diagonal spread. Okay, and again, we're gonna bring this back to we're gonna talk about these spreads, every episode when we do our options 101 series, where we're gonna start from what is a call, what is a put, and work all the way up to very advanced kind of things down the road. But in the last few minutes, I'm gonna share. Ruben's gonna be like, "Why is he sharing the screen? I should be doing that." So diagonals. Again, I love my chicken scratch on my little remarkable. Just gonna lay out what this is. We're not gonna talk about it in depth, but what a diagonal is it is a time spread. So we are using time, okay, two different expirations with different strike prices. So a time spread is across time with the same strikes. It's also called a calendar spread. A diagonal is a time spread that has different strikes. So you can see in this example, I've chosen to sell the 20 of the 275 calls in month one. Okay. And in month two, I've chosen to buy the 300 call 20 times. Typically, you do these with the same number. So if you sell 20, you buy 20, right? And that's always goes to my point of I don't want to be short units. Okay. So there is a 25-point difference between the two strikes. And then there's a time difference between the two strikes as well. So the front month can expire, in which case you will be left with the back month, right? So this can be a little tricky, right? When you get down to it. And I'm going to bring something else in here. I swear I am when I can find it. This is what the graph of that trade looks like. Okay. So it's kind of like a, it's a nice little premium selling graph because I'm short this front month, right? There's a peak right here. You'd imagine where that is. It's around the 275 number, right? Because that's the one I'm short. So we wanted to kind of hover around there or a little lower so that this expires worthless and I'm net left with the long. So this is a nice little spread. Notice my risk, right, to the upside, and I can lose to the downside. What I pay for this, in this case, it was a credit, so I collect that credit all the way through, right? But we have to do a little dancing around this spread as expiration, the front month expiration comes, because we're going to lose that short. And when we lose that short, we lose short deltas. So we're going to have to do something with that. And we're going to talk about the details of what we do with this and some of the dynamics of this spread on the, I guess it's going to have to be the Monday episode because I got the Traders Workshop tomorrow and we got Paulina on Friday. Is that right?
Right. And I think we'll dive into the Fed and see where they are.
Yeah, we're going to see. Yep, we'll chat about that on Thursday.
These strategies are so incredible, and we're gonna start to develop a whole education around Lex's brain. We're gonna harvest your brain.
Oh my God, harvesting my brain.
And we're gonna build education.
Yeah, no, we're going to talk about all these spreads over the course of time, and then some of the more intricate details of options and understanding options. Now, and I will say that people are probably like, well, do I really have to know that? Look at it. It's like anything else. You should be as well versed and as well educated as you can be in something, especially options, because they can be confusing. Doesn't mean you have to use everything that we talk about or every strategy is perfect for you. Again, I always stress, find something that fits your personality, right? Is short premium part of your personality? Is long premium? I can't do long premium. That means I'm buying things. And when I'm buying things, I get negative theta and positive vega probably. And when theta eating away at me and I'm losing every day, and then one day I make it back or get even, I don't like the dripping, the water torture thing of like, okay, I'm losing. I like the other side of the equation where I'm short this stuff if I can be, and I'm winning, and I'm managing my risk and taking things off. I'm going to lose occasionally. There's going to be a big move that's going to get me, right? I know that, but it is a defined risk strategy that I always profess and stress, right? Define risk. There is a finite number that you can lose. Right? So stay with that. Wow. Molly, you're on mute. You know why? I don't know why you're on mute. I can't get you off of mute. Oh, your mic isn't connected. Oh, well. Well, on that note, we'll see you next time. And we'll catch up tomorrow with Jason on the FOMC and what he's seen in Vana. So that's coming. And then Friday, we get to visit with Paulina again. So great to see you guys. Have a great Wednesday.